Good afternoon, gentlemen. Really looking forward to this conversation. We're going to talk about all things climate and all things finance, as is clear by the topic Bharat Climate Forum 2026. We're going to be discussing from India to the world, Bharat bankable. So what do we do right to put in the money, the right place to ensure that we are able to really counter the challenges that climate impact is throwing our way? To begin with, if I can ask Mr. Revankar, because NBFC landscape has shifted, it's been evolving. You somehow, through those shifts and changes, have been growing. Given the current challenges, tell us what's really worked for you, how crucial have last mile asset-backed models like commercial vehicle financing been to this success? So if we could start with that model and really ask about your model of success, what's helped Shriram?
Yeah, thank you. Let me start with our initiative, which we have taken in green financing. We created a separate vertical for green financing, and we identified certain area of green financing so that there is a focus. Because unless you identify there is a focus and a separate set of team, you don't really understand the business model well. We started 1 year back. Now, yeah, we just completed 1 year. We have scaled it up from doing around 40-50 crores per month to around now nearly 150 crores per month. Very soon we should be able to reach 200 crores per month. The focus area is vehicles, charging, and the individual house solar panel. These are the three broad area we have taken. And adoption, if you see the way things are moving, we have seen a significant improvement in three-wheeler. Three-wheeler, increasingly 25 to 30% of the new three-wheelers sold today is EV, electric vehicle. We expected much faster growth in two-wheeler, but it is not really growing. It is at around 5%. Cars are improving. Cars have improved from around 2% to 4%. So that is a reasonably faster growth. Commercial vehicle, I am seeing a lot of interest coming, especially in the lower tonnage. Because a higher tonnage, it will take some time, but lower tonnage, it is happening. I'm very happy with the progress what we have made in green financing, because I feel at 30% is the inflection point. And very soon, it can become 70-80% of the three-wheeler sold in India will be electric. Because once you reach the inflection point, you go, like in the Norway and Sweden, it started with electric vehicles, especially the cars, and today they have reached 95%. Once they cross 30, very soon.
What's your target window? How many years are we looking at to, let's say, compare ourselves to a country that's literally been able to ensure that model in place?
I think it will take some time, but what we need is a supporting system.
Yeah.
When I say supporting system, where everyone is aware of a advantage. It's mostly commercial decision. We can't force any individuals to have an electric vehicle without a viability. But how the viability we can achieve is by creating that kind of awareness and the environment.
What kind of innovations, if I may just add to that, have played a key role in the growth that you've seen recently? So is it data underwriting, or is it some sort of risk management innovations that have played a huge part in the story?
No, this will come with data being available now on everything. It's easier adopting a digital model, innovating and reaching the people. They are all it's on go. Like for any business that will come, I don't think that will make a big change in the way you do the business. But infrastructure is very important. Now, why three-wheeler succeeded is because they have given a normal plug and play for three-wheeler. Therefore, any three-wheeler owner can use it as a home charging station. But if you have to go higher up, then you need public infrastructure. And the biggest infrastructure is with government. So both state government and state government have to come out and make infrastructure available for public charging. And then there will be big change, especially I believe all the public transportation in the cities can become electric vehicles going forward. We need to understand how things have changed in the past. In early 2000, the CNG became compulsory. And in last 20 years or 25 years, this CNG adoption has happened almost everywhere, every city. Diesel has gone out. There's only CNG and petrol now, in mostly public transportation. So once government puts that kind of infrastructure and the facility, things will scale. Now, CNG also, if you look at the CNG availability was only in Delhi and certain part of Western India. Therefore, even CNG adoption took 25 years to. So, unless government puts infrastructure upfront, it cannot scale up beyond the expectation.
Okay, Mr. Tandon and gentlemen, I'm going to just start with the people present here, the two guests we have here on the stage. So, Mr. Tandon, IFC has also played a central role in renewable energy, green manufacturing, climate-aligned infrastructure. Tell us of what you've observed through your experience from the South Asia story and experience. What separates green industrial projects that invite long-term capital from those that don't?
Okay, so when IFC looks at investing money in any green project, we look at from a triple bottom line perspective. One is obviously return. Like any investor, we have to look at risk return. Are we going to get our commercial returns back? That's basic. Every investor looks at that. Second is that project or model scalable and programmatic? It means that whether our money that is going there, is it just a drop in the ocean? Is it just a one-off project? Or do we have a chance using that project to really create, like Mr. Umesh was saying, to really create a complete market ecosystem around it, so that several replicable, demonstrable projects that come up, and therefore you create a market around it. And the third is the impact. What is the impact of that project, whether it's on jobs or on emission reduction, etc. Once all these three things align, we come in with our equity and risk capital, because as a multilateral, our capital is scarce. My colleague Sanjeev is there from ADB, and there's a lot of pressure on the multilaterals to use our capital judiciously to invite, instead of billions, trillions of dollars into the country. Like when we did and I was involved in doing the first solar project from IFC side in this country. This was in 2004. That time solar was not a fancy word. Everybody thought I was crazy investing in a solar project. But that started the journey, and we created lots of projects after that, and it created a market class around it. Similarly on green and affordable housing. Similarly on electric mobility, we are trying to do that. We are trying to do our first green hydrogen project, which hopefully will create another asset class around it. Thanks.
Speaking of Mr. Kaushik, since you've already tossed a little bit of challenge that he's had to face, Mr. Kaushik, how does ADB see the role of MDBs? And that's a cue I've taken from Mr. Tandon's reference. How is it that you see cleantech manufacturing become more investable in emerging markets like India? What's been the story there, the idea that you have, in a sense, been able to unearth over the years?
Thank you. The main headline from me is to echo what Shalabh was saying in terms of the scarcity of sovereign of the MDB capital chasing some of these green bankable projects. What ADB did a couple of years ago was to reinvent itself as a green investment bank or a climate bank for Asia. And the directions that we received from our president and the board was that in most of our projects around the world, we will look for green ESG, environment-friendly projects, or we would look for those projects which enhance leverage and enhance the flow of funds to private sector development or private sector projects. So therefore, the main thing that we look for when looking at projects in ADB is, of course, in terms of environment friendliness, whether they are climate adaptation projects or climate mitigation projects, but also how do they satisfy the need for leveraging those scarce MDB funds, multiplying that and increasing a further flow of funds, if possible, into the private sector. Having said that, ADB divides its funding into two buckets. One is the sovereign side, where, of course, it's not driven by any profit motive. It's more in terms of increasing the flow of affordable credit and access. This is where we look at things like financial inclusion, parity, gender equity, etc. And so therefore, we look at green bankable projects, which actually increase some of these objectives. To give you an example, we've recently funded a project at IFCL, which is going to finance infrastructure projects that are ESG oriented, which increase disaster resilience, for example. The other side is the non-sovereign side that Shalabh was talking about, and which is where players like IFC are present. Our non-sovereign or private sector operations of ADB are very active in India, for example, on the non-sovereign side. And this is where, of course, there is an aspect of returns, the risk taken, and therefore what are the commensurate returns. But here also, the main objective is to spread those scarce MDB dollars in the widest possible manner, to leverage them and to increase access to affordable finance. And I can give several examples as we go through the discussion on that. Let me stop there. Thank you.
Okay, wonderful. Mr. Tiwari, banks play a big part of the story, and we're essentially going to keep touching on the various ways we can look at greater investments and we can look at higher productivity as well. Speaking of the Indian banking system, what do you think lies at the core of this concern that the banking system overall has, or the worry there is in investing in clean tech manufacturing, in green industries? What primarily are those concerns that we need to sort of get into at the beginning of this conversation with you?
Thank you, Crispin, and good afternoon to all my co-panelists, and thank you also to Jagjit and Mahajanji for inviting me. As far as banks are concerned, Crispin, the entire clean tech manufacturing or clean tech can be divided into two parts. One is the early movers in solar and wind and so on, where it is fairly established, where the manufacturing mechanisms, methodologies are all established. Improvements continue to happen, led primarily by the scale at which China operates, and that China is able to do a lot more in that area, but we are also catching up. So that's something which is settled. Banks have really funded it well. But the problem is very, very large. Estimates by the CEW estimates that around 10.5 trillion will be needed till 2070, out of which about 2.5 trillion, or let's say 225 trillion rupees by 2030. The current beginning to date in green energy funding is just 2.6 trillion by banks. There are, of course, non-banks and maybe international institutions who have done both. So therefore, there's a lot of gap between what funding is required. And one thing we are very clear from the beginning, that it is Indian money which is going to ultimately help in doing what we need for our country. So the basic issues which the banks face is that if there is a frontier technology which has not been proven or not been scaled, then the risk of the loan going bad is a lot. And therefore, banks do not like to come in. And this is more of a venture area or a private equity area where risks are taken, and if the technology succeeds, then of course the returns are multiple X's of whatever. And these are areas that venture capitalists get into. Banks don't get it. So what do banks? And apart from the fact the technology, banks find it hard to understand also that whether the technology, how does it work? There are not enough experts available. The cash flow is uncertain. And here again, generally the linkage is to the offtake arrangements, which again have to be understood. So these are some of the challenges the banks face, and therefore the banks look for some kind of a risk mitigation, which can come either in the form of a partial credit enhancement like a guarantee, which can be given by an institution, or maybe somewhere for blended finance where some bit of risk is taken by any of the institutions which are here, and the rest the banks can take up. So therefore, these are some of the challenges the banks face in terms of scaling up clean tech.
To what extent, you spoke of guarantees, Mr. Tiwari, to what extent do these guarantees or first loss capital, for instance, actually influence lending decisions at scale? It does help, but to what extent?
It does help because the first few deals which are done, and as the technology reaches a certain scale, and the banks have done, let's say, a few deals, let's say the total size is 100 rupees, and we have done some 10-15% of the first 10-15%, which are the most risky because the banks do not have the appropriate risk model. They do not have a full understanding of the technology. They do not have a full understanding of the market around it. So all of that develops as technology scales. Mr. Revankar was mentioning about 30% being the inflection point. If you take that as a basis, then I would argue that the first 20-25% is the most crucial. Once that stage is passed, as for a country like India, things have already scaled, and we will have a lower cost. A lot of players would come in, and the banks alone will not be doing this. They will be supported by many other players who might have come in, and the banks can themselves take this risk. Today in solar, banks don't require any kind of a mitigation; they do it on their own.
So the first round of our conversation essentially was restricted to where are we at currently, and in the interim, what we can do is we've touched upon briefly on the challenges as well. We're going to slowly shift into what solutions can we come up with and at least start talking about. Mr. Revankar, if we once again go back to the NBFC story, they essentially have been at the heart of the MSME ecosystem, and the MSME forms the backbone of Indian economy, so it can't be left untouched in this conversation. Do you see NBFCs, though, moving from just taking the lender's position to actually becoming ecosystem or players, for instance? And if yes, how are they going to do that without losing financial discipline?
See, NBFC has a role. We are lenders. We can't be taking a developmental role. Developmental role normally comes from the government or government institutes or international institutes. They play a role. As Mr. Tiwari right now said, that the participation or a co-lending support comes from the larger institute. It helps. It helps. But how do we reach to retail masses to create an awareness? Like by just improving certain green tech, you can improve your operational efficiency, bring down the cost. This knowledge need to be provided. So creating that knowledge pool is very important. I think the international agencies who have experience, global experience on which are the technologies are likely to improve the productivity and efficiency of each of the machines being used by the MSME segment, that will be of a great help. So I think the entire ecosystem has to understand how to create the awareness on the advantages of using modern technology and bring down the wastage or bring down the energy usage. I think this is somewhere I think NBFC can play a very, very important role because we have a reach. We are large in numbers, we have deep-rooted, we are individually engaged with players. This can be done. But there has to be a support system built. Knowledge needs to be passed on to them and make them more efficient. That's where I think we can play a role. So I think being a lender, it also is an advantage for us because my customer becomes more efficient. And if he is able to, I'm able to pass on some benefit of cheaper cost of borrowing, then it also helps. In fact, we recommended recently to RBI also that any green financing has to become priority sector. So that easily, then awareness gets multifold. Everybody knows that this comes under priority sector, so government and regulator both are attending to that. That helps.
Okay, let's really go beyond renewables. We've spoken about renewables. That was my opening question to you, Mr. Tandon. Green bonds are most certainly doing well, but mostly in renewables, so solar and wind. How can we use capital markets to fund green factories, new clean industries that take longer to make money? Because that's the most challenging part here.
So I think that's a great question. Before I come to that, I just want to add a point to what Mr. Revankar said on knowledge. This is a feedback the World Bank Group has also been hearing, that knowledge is critical. So at least at the World Bank, we are creating a separate bank called the Knowledge Bank, where we'll get global best practices from different countries and apply it to the extent it's customizable for a country. And especially on MSMEs, we have a global MSME forum. We organized it 2 years ago at the G20 in India, precisely on your question on knowledge. So I think that feedback is well taken and received, at least by us. Christine, on your question on green bonds and capital, not every green bonds and capital market is not the solution for every kind of financing. Let's segregate. And I would bring the discussion at a high level. In one of the earlier sessions, Mr. Amitabh Kant was talking, and maybe I'll sound a little controversial here.
Since we're deep diving into finances,
he was talking about that, and a lot of people also talked about that capital is not a constraint. If the project is good and viable, then capital is not a constraint. I tend to agree and disagree. The disagreement is that, and in the previous session on manufacturing, they were saying, why is China where it is? Why is India where it is not? It's because in China, the cost of capital and the risk capital that is available is far different from what it's available in India. Yes, quantum of capital available in India is huge, but it's the same, they are chasing the same bankable deals. So there's a competition amongst the banks to chase the same deal. There is, to do green factories, what you were mentioning, to do risky stuff, which are not yet easily bankable, financeable, capital market may not be the best instrument for that. You first have to build the market for that, then reduce the risk and de-risk, like Ashwini was saying, either through first loss or guarantees or whatever. Let the market become stable so that the risks have come down, let the market understand it, and then you open it up for capital markets like green bond, etc. So there is a journey and a phase. So capital is a constraint. The right kind of capital product is a constraint for the growth story.
And Mr. Kaushik, what are these guarantees? I think everyone has broadly touched upon some of these guarantees, but which guarantee or risk sharing structures have been most effective, if I can put it that way, in unlocking capital for green industry? At least the kinds that Mr. Tandon has also just spoken of.
Yes, thank you for asking that, because this is something we are working on right now in India. We are working on with a client which is one of India's largest infrastructure financing institutions in the DFI sector. And we are trying to create a partial credit enhancement facility. This is not a credit guarantee for a borrowing. This is actually an enhancement facility whereby bond issuers of certain infrastructure projects can have their rating enhanced. So, like Mr. Tandon, Shalabh was talking about the cost of capital being an important thing. We are trying to bring down the cost of capital for somebody who is a bond issuer, but let's say he is BBB rated. How does he, and therefore, he has an expensive borrowing proposition from banks or other institutions. How do we bring down that cost of capital? That is by enhancing his rating by a couple of notches. So for that, we are setting up a credit enhancement facility along with this DFI. And what it will achieve is it will extend those credit guarantees or credit enhancement backstops to the bond issuances of these developers. This in turn will enhance their rating by a couple of notches, let's say to an A or a AA, and therefore the cost of capital would come down. And I think India needs a very large amount of such credit enhancement facilities or guarantees. The more, the better. It need not be just one supporting or anchoring institution. There can be multiple institutions like this. We also, we were talking, Mr. Revankar was talking about MSMEs and the clients of NBFCs. What we find is that some of these MSMEs are able to access capital, but then that is in very high digits, double digits, or even sometimes 18 to 20%. So therefore, to enhance the affordability of that credit for MSMEs, we have also structured credit guarantees, which will actually stand behind these MSME borrowers ensuring that they not only have to offer lesser or no collateral to the banks for that borrowing, but also because their perceived riskiness is reduced and therefore the cost of capital to them turns out to be much lower. So I think this kind of credit guarantee mechanism also has been tried in, I was in the Ministry of Finance during the COVID time, and we tried these credit guarantees in a number of government schemes. For example, the working capital scheme for MSMEs, etc., and it worked very well. So I am from ADB side, we are strong believers in setting up such facilities and also multiplying and leveraging those funds that Mr. Tiwari, for example, was talking about co-lending. So bring in the cheaper multilateral capital or bring in the blended finance, make the overall pool of capital cheaper along with credit guarantees so that there is much more of capital which is reasonably priced flowing along across the whole private sector.
So put all of this together and you'll definitely see the needle moving. So we're going to, try and quickly take in closing remarks from you all. We have the last 8 minutes or so. Mr. Tiwari, you already spoke of guarantees, so I'm going to take this to the next level and ask you what then should be done. So how do we fix where we're at? And if there's one change that I ask you today that banks need the most, can be policy level, can be regulatory, can be risk sharing, what would you say will help banks lead India's green industrial financing?
So there cannot be just one change the banks need. It has to be a lot of changes. And
which one would be the first?
No, I'll highlight 2 or 3. And before that, let me thank Shalabh for the knowledge bank. It's just that knowledge needs to come to us faster. You set up that bank, let it come to us. On what do the banks need? See, I would argue there are 3-4 things. I mean, don't restrict me to one. I'll go quickly. One is, as Mr. Revanka mentioned, this priority sector. Though there is a debate that if we include renewables and let's say green, we can actually not include renewables because renewables is already there for a smaller scale up to 30 megawatt, and that has really pushed up a lot of things. But the other green tech, which is more riskier, the priority sector tag would help. So that's one change. Other is green deposits were taken out by RBI, but there is no dispensation given, and there is a compliance cost in terms of certifying that they are green. And therefore, there is nobody who's interested in taking a lower interest rate on deposits, and they have not picked up at all. So some regulatory dispensation in terms of taking out them from CRR, SLR would be helpful. Third thing, I think, we have talked about partial credit enhancements and guarantees, which is useful. But I still argue that there is a need for a green institution, and we have a good example in Australia, where there is a green bank which takes up these frontier technologies, initially takes the risk, and as soon as they start to get scale, hands it over to the banks and other institutions to finally scale that up. So I think we need some such thing, while NAFID is there as an infra institution which is trying to do some of this, but it is a very, very specialized area because these things keep changing. On the one side, you have green hydrogen, the electric vehicles, latest battery technologies, while we are all aware of the lithium ion, but we also don't want a complete dependence on some countries. And therefore, we are trying to understand and have newer technologies. This will not get done if we have these traditional methods. So we need all kinds of methods to actually take India forward in this area.
I think one thing that is safe to conclude of the several points that the panelists have made is, how do you begin investing in new clean tech, right? That's one key area that's seeing a lot of challenge. Mr. Revankar, how do you lend to new age clean tech businesses? So traditional credit models struggle with young clean tech firms. It's something that we've established broadly by now. How do you think that gap can be bridged?
See, you need to have some kind of a visibility of changes or technology, and that probably is done by creating an awareness. I go back to the government to create the awareness, because if the government has a net carbon target and what should be that, how should we reach, how quickly we should reach, that a clear path has to be there, and creating the visibility is important. See, government can do a clear visibility by making all public transportation green. as a policy. That means all individuals, all the entire population is see that kind of a changes in front of their eyes, and everybody will start talking about it. So that is very important. I think we need a little more action from the government and quicker adoption to the green. Like you just look at the trains.
So is there a policy or a market rule that's possibly on top of your mind that you think could crack this code?
Simple, all public transportation, you have to have planned to become a green. When I say public transportation, all buses, now trains are all electric. So you all buses, all cabs, and moment you do this, then all other private players also, individual also will go to the green because infrastructure gets created. Infrastructure is very important and visibility is more important.
Okay. Mr. Tandon, your thoughts there. Is there one big institutional idea on your mind if I ask you how we can contribute in a bigger way to really get there as far as India's green
Yeah, I think
transition story is
Ashwini ji
concerned?
touched upon it. Ashwini touched upon it, creating a specialized institution to take risk in certain areas where the market is not ready to finance. That's one way of looking at it. The other way of the same side is, are there ways of deploying blended finance? I think Sanjeev touched upon it. Blended finance or more risky capital or concessional capital to unlock these markets. I will say both of these can work with a caveat that there has to be an end goal in mind. There has to be a road to sustainability. The concept of blended finance has to remain a temporary concept. It cannot be a permanent concept because it's not infinite amount of capital available to you. So let's say the government of India has large amounts of subsidy programs. Can we repurpose some of those subsidies in the blended finance concept and prioritize it and say, this is where I'm going to get the biggest bang for the buck? Let's say I'm going to allocate X amount of concessional capital for green hydrogen, but I have an end game in mind. This is only temporary, to demonstrate certain things, to create the demand, to create the scale. After 5 years, this sector will not need any blended finance. The market will be able to finance it just like it's financing solar, just like it's financing wind. That is what
that
is required.
model you think can be replicated every few years, but we have to keep changing and transitioning.
It. So every 3 years, there will be a new industry which would need it. Do that judiciously, and that's what's going to create the whole thing. It can be done in a specialized institution, like Ashwini was said. It can be done, I don't know whether existing or whatever. Think of a governance structure where it can be done. But that's the way to do it, probably.
Okay. And very quickly, Mr. Kaushik, I again want to put the India story here and ask you if India is really focused, or should it now be focusing more on getting global investors off the sidelines? And if yes, how do we go about it?
So you've touched upon a hurting chord with me, and I was about to build on what Mr. Tiwari and Shalabh said. There is a definite need for a dedicated institution to bring together blended finance, green finance, all of this. But ADB has had an experience in India. We have just set up a green blended finance fund, which will exclusively blend the concessional finance that we've got from GCF Korea into infrastructure and other green projects. But can you believe it? The processes that we've had to go through. I mean, there is a $200 million small fund which is available at throwaway prices at a very small cost. But for takers in Indian markets to come forward and for projects to come and avail that concessional financing from us is a much more difficult task. It is somewhere we fail in our processes, in the bureaucratic delays. I can afford to say that because, I at least used to be a bureaucrat myself. But we just don't have the speed, the dexterity, the structuring capability. We are full of these hidden fears. So therefore, it is really a shame that a lot of the blended finance that is available around the world goes without takers for it. And therefore, if you set up a dedicated institution that can aggregate and collect all these various funds from around the world, I just named one, which is GCF Korea or ADB. But there are any number of such funds around the world. You need to go after them, collect them, and provide them with that pool of bankable projects which are actually speedily able to avail that concessional finance. I think that is the need of the hour.
And safe to say that there are many signs that global investors are looking for perhaps to take this story forward. We're going to have to wrap up this conversation on that note. Thank you so much, gentlemen, for being a part of this and hopefully making some notes, taking this story forward. We'll see what changes kick in over the next 5 years. Over to our host for the next introduction. Thank you.